What's up, guys? Happy 4th. Welcome back to the weekly video where I try to combine the news, the economic data, and the technical to predict the movement for the week ahead. So far last week, I think it's a pretty boring week. We was in this range right here. We didn't even fill the gap. We came up to the 20-day moving average and back down. So I'm assuming we're going to do the same for this upcoming week because there are not a lot of data to go over and not the important one. So let's go to the economic calendar and take a look. Okay, so on Monday we have the holiday, the July 4th. All right, and then on Tuesday we have the factory order, which I don't think going to be significant. So unless there's something happen with the international market or any news are coming out, we probably going to continue momentum on Friday. We did pop up. Maybe we move up to the 20-day moving average, and then on Wednesday. We have some data here. Fed Williams speech. I'm not sure how important that's going to be, but the next one, the job unemployment, job opening. That one I think is going to be important because it's kind of give a glimpse into the unemployment rate also, because you know the job opening, they're going to tell you is it people going to be laying off or not. What kind of layoff they're going to have, right? People automatic quit, or they get laid off, or they die, or they just retire. So those are the things. So I think that's going to give a glimpse whether or not people get laid off or not. So that's important because at this moment, you know, we are possibly in the line of recession, right? That's what everyone is talking about. So that's, I believe, is important. And then also the ISM non-manufactured PMI. This one is about the service sector here, so they're gonna give us a forecast somewhat of the economy also. So I think this is important. So hopefully, you know, at this moment I'm not sure whether or not good news is good news or good news is bad news. So in this case, I think if it's in between, it's a good thing. You know, not too hot, not too bad, then it's good, would be okay. And then also on Wednesday we have the FOMC minutes. I think that is somewhat important because it gives us a glimpse into what they was discussing about last meeting, because Powell came out somewhat kind of like neutral. He decided not to be too aggressive. Well, not aggressive. He decided to take a back seat, right? Not to be too proactive, just reactive to what the data is coming. So at this moment, that's what it is. I'm sorry for the noise. I'm in the ghetto. Okay. So that's gonna give us a look, and then depending on the data, that's when the market gonna be moving. And then on Thursday, not much, right? The ADP employment, balance of trade. I don't think this is gonna be that much important. We've been having a deficit for so long now, so I mean I don't think it's gonna be a big thing, but if we are in the recession though, and then we have increased the balance of trades, we still have a deficit, that might be a problem. But at this moment, I don't think a big deal at this moment, all right? And then we have the Fed speak, Walter and Bullet. I'm not sure how important that's going to be. We will see, all right? So that maybe if on Thursday, I guess if nothing important, the momentum of Wednesday going to carry out, okay? And then Friday, I think that's the most important day. There's the unemployment rate here, and then Fed Williams speech. The unemployment rate at this moment, I think, like, well, at this moment, like they say, bad news, or good news is bad news. At this point, I think if unemployment come out as expected, then it would be fine. But if it's too good, then that would be bad for the market. And if it's too bad, really bad, it's going to be bad for the market. So at this point, if anything is right in the expectation level, would be okay. And then and that I think is about it. So I don't think it's going to move the market that much, because that's what I see in the range. Because next week we have CPI here, which is going to be, you know, the dominant number that everyone looking at for the past few months, right? If inflation is peaked. So that's the thing. So next week is going to be the main player. So this week is just another, you know, probably inside week here at this point. All right, and then that with the economic calendar, the earning calendar wise is nothing besides Levi on Thursday. Nothing important. There are other companies. Okay, but I think the most important is 2 weeks from now we're going to have earnings season, and that's the thing that would be important, because right now a lot of companies are not pricing in, you know, I'm expecting, especially the discretionary sector, they're probably going to do bad. And that's the Levi, right? We're going to take a look at the chart on that, and we will talk about it. But most likely, I think the discretionary sector will do really bad this upcoming quarter because the let's see, demand destruction has kicked in at this point, okay? And then next segment is the uncertainty, is semi-long outlook. I'm not going to go over everything except for maybe the blue part here. There's nothing here. So right this moment, the war, I think it has been negative so far, but I think it's starting to turn positive because at this moment, right, the midterm is coming up in November. And then the European gas crisis also, because by the time winter coming, they need the gas. So basically, it aligned really well here. Do you think around November, right? So they're going to need gas, the election. So they might have some kind of solution here. So I'm assuming the war might be ended around that time because before that, maybe in maybe October, September, I'm assuming, and that might cause the rally. Going to give the market the rally because we are somewhat oversold at this moment as we're going to look into it. Okay, so that's the thing with the war. I'm seeing a positive sentiment coming up from that. China right now, I mean, they're still having problem with the lockdown and then bank run too. So we will see how that progress. I think by the end of the year, this might be a problem with China. Okay, inflation right now, I'm going to come out and make my stand here. You know, I believe this next CPI is going to be hot. All right, because gas price did not peak. Gas price, not oil price. Okay? Oil price did peak mid June, right? But the thing, gas price actually hit $5 in the East Coast beginning of June. Okay, and also diesel prices, same thing. So that's the thing. Diesel price and gas price kind of, if they are, you know, increasing prices, everything else will be, right? Because transportation with diesel prices. So I'm assuming this gonna be hot, and it's gonna cause the market to go down. You know, maybe a capitulation, an actual bottom gonna form after this, because if this CPI come out hot, Jerome Powell has to increase the rate on what the market priced in. So depend on that also. All right, so that what I believe going to happen. I might be wrong. I'm just, you know, a speculator, right? So that's what I believe. I could be wrong. If you think otherwise, let me know in the comment section. Okay, and I think that's about it for that. You could read it, this thing. So that's it for that segment, and let's go to the technical analysis. Okay, so this is a SPY weekly. All right, like I said, we come up to the 20-day moving average. 20-day moving average is something, you know, in the line of the sand. It's the tug of war. So right now, it hit that and it went back down. But the retracement here, you could see this is a 50% retracement, right? So if the CPI, I believe, right, this week we're gonna stay within here, unless the unemployment come out really bad, right? And then we might make a low. But beside that, if it come out as expectation, we might have a rally, or if it's too good, then it might also could tank too. But I don't think it's gonna make a new low this week. Okay, probably the CPI will not cause the move. Okay, and we don't know what the CPI is, right? If it's come out hot, we're definitely gonna make a new low. All right, but it's come out as an expectation or maybe lower, we might have a rally and pop out of this range here. So we might. That if it does, we might have a bottom here. So that's a possibility, okay, at this moment. All right. Oh my God, there's a fire truck. Cop, what's going on? I live in the ghetto. I'm sorry. All right. So basically, let's take a look, maybe a closer look here, right? On the 60-day moving average, right? So we did fill this gap. We did not fill this gap, right? The thing is, look at the uptrend here is broken, but as it tried to break down here, this level held. It held on Thursday, and then on Friday it tried again, but it did not make a new low, and then it's break out. So this range here is broken out. So right now, like I said, next week where we are targeting, if anything, 400. You know, I mean, if we could fill up this gap, it would be somewhat bullish. But that also, you know, if the CPI, it's all about the following week, the CPI. But right now, I think we're going to fluctuate between this range here. this whole range here, this whole week. Okay, if we move up here, we this uptrend line here become resistant, and then we also have this downtrend line as resistant also, right? And then look at here, right? This is the gap fill resistant, and then we have another resistance up here. So there is a lot, and then we have the 50-day moving average, and then the ultimate, not really ultimate, but one of the downtrend, another downtrend line here. So we have a lot of resistance ahead. It's hard to go above this with, you know, with just the unemployment data. Okay, so if the CPI the following week is good, then I think we might break out this range, or else we're going to make a waterfall. We're going to drip. Okay, so then look at the weekly right now, right? So right now I'm expecting, to be honest, if the CPI is hot, we are going to hit the 100-day move, 200-day moving average on the weekly chart here. All right, so 150 possible target, if anything 140. All right, so that's where I'm seeing if the CPI come out bad. Okay, so that's the thing. So right now, and then this is the monthly. So even though if we go back here, we are still in an uptrend. Okay, look at that uptrend. We have another uptrend line here from 2008. So this trend line is still good either way. Even we drop down here, we're still in an uptrend. Just so you know, I don't think we're gonna go down here unless China, depend what's gonna happen. China come out and you know, the bank run costs, you know, imploding in the economy of China, then I think that's going to be a problem. But at this point, I don't see that. Maybe toward the year end. Okay, so that's the SPY. All right, and then we have the QQQ here. QQQ is nearly the same. All of them are in the same up the 20-day pullback. Same thing. Right. The only thing is that the volume. Look at the volume is decreasing. The selling volume, which is bullish because the selling get exhausted here. Okay, the volume of the sell, you know, as you see, decreasing, which depend. I mean, it's not going to be definitely as a bad thing, but if the bad news coming out and then people get scared, the volume will definitely go up. But at this moment, the selling is quite exhausted. They need more bad news for it to continue. Just so you know, based on that. Same thing with the not the Dow Jones. Yeah, it is the Dow Jones. Okay, same thing here. Hit the 20-day, move back down 50%, retrace, waiting for data. You know, weekly, same thing. I mean, it's already. The thing with the Dow is that it's already at the 200-day moving average and then the high of the 2020 before COVID here. So in some way, it already forecast. It did not move up a lot compared to the Nasdaq and the SPY. So that's why it already back down to the, you know, COVID high of 2020. And then IWM here, usually this is somewhat of a leading indicator, but at this time it's nearly the same here, a little bit weaker, but you know, the movement is exactly the same. Okay, same thing with volume, lower also. All right, and then Dow Jones Transportation, this one, I mean, is exactly the same also. All right, not much different. All right, so they all in somewhat forecast the same thing. TLT here though, a little bit different. There's some discussionary here. It's finally break out of the downtrend line, two downtrend line, right? This downtrend line here broke out, this inside downtrend line here also. This is a main downtrend line. So target right now maybe 125 if we do move up, and if the TLT move up, this is some way forecasting not inflation but possible recession, right? So people are scared, they're going to jump in bond for safety. Okay, no longer of inflation, right? So this right here, this is the divergence I see with the TLT. Okay, so that's keep in mind. And you know, I do have a position in this. I started like last week, I believe, because if you watch the video of this, let me see here. Look, it went all the way back down here, right? This whole uptrend line and this whole support here. Look at this candle, very long down wedge here. Okay, this is very bullish, and look at the volume. It's decent volume too. So at this moment, I think the bottom of the TLT might be in. I'm assuming. Okay, this is a monthly chart though. There's a weekly chart here for the thing. So we did move up decently from volume. We will see whether or not going to hold. But target, if it does move up all the way, target is 133. All right, just so you know right now. First stop is 125, and then we go up to 133. That's where it is right here. All right, just so you know. So right now, I mean, hopefully it's going to be pulling back to this downtrend line here, and then I'm going to get in. I'm going to add more into it. All right, so just that's one of the trade you could do. Okay, just look. I think if the CPI come out bad, this thing going to rip higher. All right, just so you know. And then look, junk bond here. Junk bonds say something otherwise, right? This is bad, right? For bad company. If we go into recession, this is going to go lower, and this, you know, in some ways saying the same thing as a TOT. TOT just move up higher. Just junk bond is going to continue to break down, and this is a diversion, right? So right now this setup is a bear flag right now, you see, right? So I mean, at this point down, look at the breakdown here, somewhat high volume right here in the middle. This part is a bear flag and has no volume, and then if it's break below this, it's going to continue to go down. And look at the weekly here. So I mean, at this point right now, if it does break, it might continue all the way down to this is 2020 low, right? Let me see here. This is 2009, right? Low. So basically, if anything, if we do go into recession, possible 183 could be the target. Just so you know. So if you want to short this, I mean, it is dangerous to be honest, but look at the volume. The down volume is increasing. So you could see that that's the monthly volume, and that just started on the month, right? And look at that volume here, downtrend break. So this is saying something, you know, possible recession sign. Okay, everything actually kind of focused into that. Okay, this is the dollar. This chart, they actually make the same high, but on the actual dollar chart, it did not make a high. But right now, the uptrend is still continuing. The only thing is, I don't like it, is right here. The volume is kind of, you make a new high right here, the volume is kind of low. And then right here, we did not see any participation volume, but the uptrend is still on at this moment, all right? This is like a cup and handle, right? So look at that uptrend, right? A little bit too steep. That's the only thing I'm worried about. So right now they're probably gonna rip and then fall back down. So this is something you could play. Wait, be patient, wait for it to rip up to this level here. This is 2009, right? So in 2020, people come into the dollar for safety, and this is a good candidate for short. All right, this is a play you could wait and play. It's gonna reward you handsomely if you're gonna come in to play it. All right, so be patient for this, and it's a good short candidate because why? The volume is dying. Okay, the pressure of buying this, push it up, is dying. All right, just so you know. So right there, that's another play you could play. TOT, UUP, you know, the dollar, the bond. Gold at this moment is dead. I'm not going to talk about it. I mean, right now it's on live support, already broke down under this, so I don't think it's going to move here. We will see how it is in the future, but it needs to recapture this downtrend line. Okay, then we talk. But at this moment, it is dead. All right, I'm not talking about silver. Silver is already dead on that. Okay, this is oil. Oil look like it might make a high here, but not the oil company. Just so you know. Okay. It did not make a high here. That's the only bad thing right now, but it is still in touch with the trend line. It's kind of put in a symmetrical triangle, right? And then it break out the symmetrical, then make a new high, come back down to the support here. All right, both support and then bounce up. We'll see if this hold. I think we still have some way to go. More possible. Can't guarantee that, but you know, right now look at the uptrend. It's still on the uptrend on the weekly chart. And this is a monthly chart. Monthly chart is very up, and look at that, right? It come up to this resistant, hold up, back up a little bit. Right now, sideways. As long as it continues sideways here, I think it's gonna rip. I'm not sure what reason it's gonna be, but we might have some kind of reason. I mean, some kind of storm hit out, you know, the Gulf or refinery or whatever oil. I don't know, pipeline in the U.S. You know, but this is the Brent though, so we don't know. Maybe Russia not decide to cut everything, cut export or production. That could rip this up, right? So right now it's a potential. The VIX is not doing anything right here. It's still hold on the up high low right here. So we will see. I mean, this waiting. I think this is just waiting game for the CPI. And then the Europe right here. It broke down below this level. It break up here and then it went down, and then you know last week is actually very bearish. It's make a lower low, right? So it doesn't look good for Europe. And then if as we approach in winter, there's going to be shit out if we are not getting any resolution on the gas problem. All right, so that's something to look out for. All right. All right, let's go to the big tech stock here. Microsoft was strong compared to the market itself, right? It's break above the 20-day moving average, fill the gap, okay? Break above this inside downtrend line here, hit the 50-day moving average, back up around 50%, and now waiting for a next move right here, right? So it is very strong compared to the general market itself, all right? Google here. Google was strong last week. You know, it's filled a gap. It nearly make a high, but unfortunately, it just came down all the way. This pullback is nearly like 90%. So I'm not sure what's going on here. And this, for the technical wise, this doesn't look good because this pullback is too strong. And if it's moved back only 50% and it is breakdown, this is like a rising wedge here, a rising channel, which is very bearish. I'm not sure why, because I was thinking that the move right here, because they're gonna split, right? That's why they move up. But this pullback was kind of strong, the pullback was kind of weird. And right now, if you look at it, right, it's set up kind of like up, rising wedge, and this gonna move down, and the equal amount of moving down, that's gonna hit this level right here. So I'm not sure what's gonna cause the problem. Maybe the earning coming. So I don't know. Maybe advertisement company are not advertising anymore because, you know, they have to cut back, and that caused a problem. So I don't know. Possible play right here for Google because this chart doesn't look good. It looked very bearish. So that's another play. I'm not a financial advisor, just so you know. So do at your own risk, okay? Please. All right. So that's another play possible. And Apple here, Apple actually very similar to the other chart, so you know, not much to talk about. But like I said, it broke this upper short-term trend line here. Now it's in the downtrend. So at this moment right now, as demand destruction is kicking into gear, I don't think they're selling iPhone. They actually practically give away iPhone now. If you watch the advertisement, right, you sign up or something, you get free iPhone 13. They don't do that shit with iPhone unless there's a problem. So that's something to think about, all right? So at this moment, I think they're all having problems selling those shit right now, all right? And possibly this next earning, I'm assuming they might even come out early and say, and guide down the earning. That's the thing, all right? So be careful with Apple right now. I'm bearish on Apple. I do have a position on Apple, just so you know. And I might add in more. All right, and NVIDIA, this one very weak, semiconductor. It make a low here. Look, it test this level, test it again, come back 50%, couldn't break out this downtrend, 20-day moving average breaking down. So at this moment, it might continue down. And with the semiconductor, we're gonna talk about that soon, okay? But right now, semiconductor, they don't look too good, all right? And with in some way heavier volume too, right? Look at that, decent volume on the downside. All right, and the next one we have Tesla here. Tesla, I mean, this one, to be honest, right, I want to short Tesla, but there is a report that come out. People are afraid of shorting Tesla. But at this moment, the technical, to be honest, it moved back up here. It didn't even make a higher high. It make a higher low. It didn't even break this level, right? And then it pull back down. Right now, it seems like it's in this like symmetrical triangle right now. And then most likely, I think it's gonna break down because if you take a longer look, right, it broke the. God damn that! No, I lost. I make a bad trade on that. So look at that, right down here. Make a rising wedge right now. Which is based on what we see is the symmetrical triangle, right? This I think gonna break down, and if you do the measure move from here to here, this might reach for 450. So at this moment, I want to short Tesla, but it's so fucking expensive on the option and shit, you know. And look at the shit, you know, the volume is dead to the upside. If you watch my weekly video, you see the shit, all right, already. And then next is Amazon. Amazon is not doing well either. All right, look at this shit right here. It's somewhat set up exactly like the NVIDIA we just saw, right? Testing this lower here, testing this low. This pulled back 50%, right? And now it's moved again down here. With Amazon, is discretionary spending, right? So most likely, I think people are gonna cut back on spending. Okay, the middle class already is getting hidden right now, and then the thing is they put a lot of investment in the last couple of years too for for expecting this the demand to continue. But right now, is bad, and then there's like other problem union and all that shit. So right now, look at it. I mean, it's already come back down to the 2020 high. So I mean, I'm not sure here, but if this shit break, it's possible could break, man. We could down to the 90, and I'm serious. And the next level somewhere is $81, and it's already broke the short-term uptrend line here. And then look at the long-term trend line from 2009, right? This shit already broken, and right now it holds support right here. If anything, we continue down. So the long-term trend line for Amazon is done at this moment. I'm not sure what's the reason, but technically it's bad. All right. So Facebook right here, Facebook doesn't look good either. It moved back down here, new low, come up less than 50%. This right, maybe like 38% bounce, and then move back down to the low already. So if anything, earning, I think advertisement and shit come down. This shit gonna break down, and long-term trend line has been broken. Okay, just so you know, you didn't see this. And right now target is maybe 135, somewhere around there. All right, look at that. So I think there's more downside for this, because like I said, if Google goes, Facebook probably gonna go. Okay, and Netflix here too. Netflix is bad. Look at Netflix, right? Going sideways in this range for a while. The longer this consolidation break, the longer the consolidation here, when it's upside or downside, it's gonna be a big move. And I'm thinking it's gonna go lower, because right here, look at this, right? Move down here. The pullback, right, is not that strong. It's not even like 50% pullback. Right here, it moved down again, heavy volume, and then the up move right here, not even like 23%, maybe around 22%. So that's very bearish. The bounce has not been strong, and then it's been sideways, put in this bear flag. So I'm expecting another move down here. I'm not sure what's going on, but people cut. Not watching Stranger Things is okay. I just saw the second premiere, the second part of the thing is all right. But right now it is at this this uptrend line here. If it broke this, it's gonna be a problem. Just so you know, Netflix is in danger zone at this moment. It is still a value stock. They do have a lot of content. The Korean shit are superb. Some of the shit they made for the Korean, they know how to make movie, man. I'm telling you. I'm proud to be Asian, but I'm not Korean. But whatever. Anyway, XFL financial here. Financial similar to the general market. So we will see what that's gonna happen. Health sector, man, this thing pop up and look like it's gonna move here. So right now it's set up, it's a bull flag right here. I think it might continue to move up. So right now at this moment, like healthcare is doing well. People just rush into healthcare. So right now that kind of, in some way, people are looking for safety for the recession. They forerun that. But to be honest, if there is a recession, right, look at this, right, 2008, 2009, it's still gonna crash. So be careful there, okay? Be careful coming in. It's a crowded trade in some way, might be, but look at the volume. It's not that good. And then upturn, short-term uptrend line is broken already. All right, multiple here broken. This come back a little bit, but at this moment, like I say, if we go into recession, it's gonna get killed either way. All right, so be careful. Be careful with this. Same thing with the utility here. Freaking this back move is just crazy. I mean, people just rushing the shit. I have or I get to spread one of my thing, and then I have to close out one of my thing for not a loss, but a small gain, and then I still have one more position that I hold. That one is going to a loss right now, which I'm not happy with it. But just look at this, right? This bounce here with the look at the volume, very timid, and we in this up rising channel right here, which is bearish. Okay, so either way, this temporary people just rushing here in the short term right now to for safety, because whether or not we're going to recession, if we do, look at it, we do in recession, this thing gonna crash either way if we go into recession. So be careful, very careful. Right now is a crowded trade, just so you know. The pullback right now, because people just want to go safety right now, just in case we do hit recession. And if we do get a recession, this is gonna crash. All right, just so you know. All right, next one we have is energy. Energy right now, I think is already make the high right here. I think it's already peak out at this moment. Energy is not oil, okay? It's oil company. So even oil price go up, I don't think this is gonna make a high here, because if you look at the monthly chart, it already did. This is a 2009 high, right? It hit that. It make a high compared to that. But this one's some oil crisis in 2015. I don't remember. I don't know. All right. So at this moment, I think energy has already make it run. So be careful. Maybe downplay, continue downplay here, breakdown. But you know, the oil price is gonna interfere with this. So just be careful with that. All right. All right. Next one we have is semiconductor. This one is weird. Okay. It make a new low. And semiconductor, this is divergent compared to the market, right? Is this leading indicator that we are going to recession? Because if we do, right, semiconductor is in everything, right? So is this the signal? So because Nvidia is bad, it's also signal the same thing. And then Micron, right? Micron come out and lower the guidance too, right? Even the earning was good, but they lowered the guidance. So at this moment, I believe this, like, you know, with the utility, the healthcare sector, you know, the drop in energy price, all point to a recession at this moment. I'm not sure, are we already in the recession, or are we coming into a recession by the end of the year? We will see. But at this moment, that's what I see, okay? So next one is the earning, the Levi. This, look at this, right? This shit is bad. Doesn't look good. Set up just like the semiconductor. Okay, so the downtrend right now, put in this 3 low here, right? Right now, it's waiting for the earning, but right now it's kind of pricing in bearish, right? Bearish move right now. It's gonna break, all right? It has problem, move back, it move up to here, move down, right? Bounce 50% or 61%, and then come back all the way down. Okay, so right now, even if the earnings come out good, to be honest with you, come out good, I'm not sure if they're going to guide up or guide down. If they do guide up, maximum going to hit is 18. But the downtrend here, I think it's going to be big, all right? Downtrend here might be down all the way to $14, all right? So be careful with this. I would play the downtrend in this because this is discretionary. I go to the mall, okay? No hate on Levi. I like Levi clothes. I do have Levi clothes, but the store is always empty. Like even 50% off, people not going there. The only thing that busy in the store, to be honest, is the Nike store. But the thing is, they are having problem also, okay? So if Nike having problem, I don't think Levi is gonna do any better. So at this moment, if anything, I'll short this, okay? Because long way to go, baby. Down. All right, so at this moment, I think that's the last of the data. Maybe this is a shorter video because we don't have much to talk about. So just so you know, guys, I think this week is just an inside week, just the calm before the storm, guys. For next week, we're gonna be in this range here, and then CPI the following week gonna determine. Anyway, guys, have a happy July 4th, happy weekend, and good luck trading next week. And thank you for watching. And if you are here, thank you. You're a fan, baby. Drop a like. Anyway, thank you. Bye.